Good morning, everybody, and it's CPI day. This is Max with Trades and Gains, and inflation is back in the spotlight, and the December Consumer Price Index data has finally landed. Headline inflation rose to 2.9%, while core inflation cooled slightly to 3.2%. But the big question is, what does this mean for the Fed, the markets, and most importantly, your wallets? Let's break it all down. So, looking here, we have inflation climbing 2.9% year over year, up from the 2.7% in November. Monthly inflation rose 0.4%, marking a slight uptick from the month prior. Now, for core inflation, which strips out volatile categories such as food and energy prices, it came in at 3.2% year over year, which was lower than the 3.3% forecast on the street. On a monthly basis, core prices were flat at 0.2%, which was actually a good sign. The markets wasted no time reacting. The US dollar index fell below the key 109 support level, hitting multi-day lows. Major currencies like the euro, yen, and pound gained ground against the greenback. This signals a loss of confidence in the dollar's short-term strength. Traders are now recalibrating their expectations for the Federal Reserve's moves in 2025. And this is why the CPI report today is a big deal. The Fed's inflation target, number one. The Fed wants inflation at 2%. At 2.9%, we're not there yet. And core inflation at 3.2% shows that sticky price pressures remain. Number two, rate hike or cut. The Fed has been clear. No rate cuts until inflation shows sustained cooling. As of now, markets only see a 50% chance of a rate cut by June of 2025. And number three, consumer impact. Higher inflation means higher costs. While goods inflation is cooling, energy prices are rebounding. Translation, your wallet is still feeling the heat. So what's next for the Federal Reserve? Minutes from the December meeting reveal they're still cautious about inflation risks. Sticky inflation could complicate their rate cut timeline. But here's the twist. If inflation doesn't fall further or worse, starts creeping up, rate hikes might even be back on the table. And that's a curveball markets are not ready for. So let's zoom out. Inflation is cooling but unevenly. Housing, energy, and services are still sticky while goods prices are easing. Global factors like trade and immigration policy could play a role in future price dynamics. And don't forget, tomorrow we have PP. No, we don't have anything tomorrow. And next week's Fed meeting, both could shift this narrative fast. All right. Anyways, that's your CPI breakdown. Inflation isn't falling as fast as we'd like, and the Fed's 2% target still feels far off. Will tomorrow's data confirm a cooling trend, or are we bracing for more turbulence? Drop your thoughts in the comments and hit the subscribe to stay updated on all things markets and inflation, and I will see you in the next episode.